Today is the 19th of February and a position update for one or two currency pairs. And the first one is the dollar index, with a very interesting possible completion of what could be labelled as an A. So 3 into an A, B, 1, 2, 3, 4 and 5. And the final fifth wave seen in the weekly chart, which is here, as a 1, 2, 3, 4 and possible 5. Classic divergence between wave 3 and 5 in the daily and including in the weekly chart at this moment in time. That yet remains to be seen if this final fifth wave is complete. This could bubble around here for another week or two, but there is a possible count. And I'm starting to look at a possible 1, 2, 3, 4, 5, A, B, maybe a C wave decline to the 50 or 61.8%, and then a further rally. But certainly worth keeping a very close eye if the dollar index starts to break above 90.58, which would be the fourth wave and then the fifth of a rally that would then end a correction which started in March of 2015. But certainly on the C wave decline as a 1, 2, 3, 4 and 5, certainly looking very clear with that 5 wave for a C wave for what could be potentially labelled as a wave 4, with a wave 1, 2, 3, A, B, C, 4 and then a final fifth. And if the dollar index should rally with a long dollar, it is a possibility that an A, B, C, which has finished in Eurodollar, would take out the low from this perspective here. So you could see, well, you would see, there's no could about it, if the dollar index rallies you will see a decline in Eurodollar. But interestingly enough, there's a number of other currency pairs that need what looks to be a final fifth to the downside. If we look at Australian US dollar, we have an A, B, 1, 2, 3, then this long fourth wave, and the long dollar would give the final thrust down possibly for the Australian US dollar. And then finally another one looking at sterling US dollar, where we've had a wave 1, 2, 1, 2, 3, 4 and 5 for wave 3. This fourth wave correction, which has been in operation since October 16, so far bouncing off exactly on the 61.8% retracement of this 5 wave decline for a third wave. And there is something which could possibly be labelled, and it remains to be seen, if we have a 1 ABC2, 1 ABC2, this C wave of this second wave, possibly with one further thrust higher here, because if you look at that and this position with a 1, 2, 3, 4, 5, so there could be a final push to the upside. But if it starts to break above here, this count of a 1, 2, 1, 2 would be void. So just some interesting positions which really for the past 2 and 3 years, from a currency perspective, certainly with the dollar, euro dollar, Australian US dollar and sterling US dollar, and I'm sure other dollar denominated currency pairs which are potentially finishing, as I mentioned, 24 to 36 month corrections, and we could see a rally to the upside in the dollar index that would have implications across those other currency pairs. So just as a point to continue to watch the dollar index for a possible bullish advance from this particular position. As I mentioned, it's yet to be seen if this fifth wave is complete. It could make another attempt to the low side, but if it starts to break above, as I mentioned, the figure here, which is 90.60 or 90.50, then certainly worth to keep a close eye on if that's looking, as I mentioned, to rally to the upside. So we'll continue to watch and update and see if a potential bullish advance starts within the dollar index.